90% of all US stocks are owned by just top 10% of Americans. The stock market is one of the best ways to get at the top of the financial hierarchy. But because it's so complicated, only the top 10% of Americans are actually making money from the stock market. In this video, I will be teaching you how to actually make money from the stock market by sharing with you 5 most important lessons that I have learned investing in the stock market. There are a lot of places to invest your money, such as the real estate, the bond market, crypto. But if you look at the numbers, the stock market is the best by a huge margin. During the pandemic alone, the top 1% made $6.5 trillion from the stock market. Not billions, not millions, but literally trillions with a T. And that's because the stock market is huge, but at the same time very liquid compared to real estate, for example, where it takes quite some time to actually buy or sell some real estate. It's much more time consuming and bureaucratic. So let's try to break down the stock market and make sense out of it. Number 1, behind every stock, there is a real company. Let's say you want to start a business. The natural thing would be to do is that work hard, save as much money as you can in order to start your business. But that can take years, especially if you want to build a huge business that will be making millions, if not billions of dollars, and not just a corner shop that will pay the bills. Unless your dad will give you a small loan of $1 million, it will take you a lifetime to save that much money. If your dad can give you $1 million to start, someone else's dad might actually give you the capital to start, but in exchange for a share in your business. Yes, he will own 20% of your company, but now you have $1 million to start with. After hiring friends and renting an office, you will quickly run out of money. So you will have to raise more money again by selling another part of your company. Now, since you have a team, a products and clients, the value of your business is much higher. So you might be able to raise another $1 million just by selling 5% of your company. The problem with this way of raising money is that you're raising money from a few people who are not willing to pay you more than a few $1 million at best. To compete with likes like Amazon, Meta, or Airbnb, you need to raise billions of dollars. And that's what the stock market is for. You're not just going to raise money from a few angel investors, but from the entire world by offering your stocks to the public in the stock market. The stock market is essentially a place where companies are traded, but because it is so big, they're divided into many small parts called stocks or shares. When Facebook went public, it raised over $16 billion. They raised so much money that they could relax and keep expanding for the next few years. That's more money than the entire budget of a country like Serbia. So before buying any stock, remember the lesson number 1. Behind every stock, there is a real company with real products and services. The stock market isn't just about charts and numbers. Investing in the stock market isn't about predicting how the graph will behave, but rather understanding how the company behind the stock is actually behaving. Wait a second, I get all of that. But how do you make money from the stock market? When you buy a stock of any company from the stock market, you become an owner of that company. That sounds a bit too optimistic. Let me put that a bit more clearly. You become one out of many owners of that company. Instead of buying the latest iPhone, for example, if you spend that money on Apple stocks, you can proudly call yourself one of the owners of Apple. But Apple has like 16 billion of outstanding shares, which means that hypothetically, Apple has like billions of owners. Let's say you own the corner shop. How do you make money out of it? At the end of every month or a quarter, you will take the total revenue, deduct all the possible expenses, and the rest is net profit, assuming that you have paid your taxes. It's the same thing with stocks. Whenever one of your companies makes money, they have to share that profit with you. It's called a dividend. Apple, for example, pays almost $1 on dividends for every Apple stocks you own. The more Apple stocks you own, the more dividends you receive. Fair enough. However, not all companies pay dividends. Take Meta, for example. It's one of the largest companies in the world. It almost has like a monopoly on social media. It owns Instagram, Facebook, Messenger, WhatsApp, and now Threads. But it hasn't paid a dime in dividends to its investors since the day it went public. If that's the case, you might be wondering, why people are still investing in Meta. Tech startups have like slightly different business model. They're telling the investors that whatever money Meta makes today, they will reinvest it back into the company and expand the company. Instead of sharing the net profit they have made with you, they will buy WhatsApp for $19 billion or Instagram for $1 billion or spend $1 billion developing a new app to challenge Twitter. The bigger the company gets, the more valuable your ownership of the company will be. 5 years ago, the price of a single Meta stock was $130. Today, it's over $280. Yes, we haven't paid you a dime in dividends, but now you can sell your stock and make 114% on your investment. In fact, since the dot-com revolution, more and more companies are focusing on expanding the company instead of paying dividends, which makes more sense as it's harder and harder to compete. There are other ways to make money in the stock market, but these are the two primary ways investors often make money investing in the stock market. Number 3, invest in what you understand the best. The reason why most people end up losing money when they enter the stock market is that they're competing with professional investors on Wall Street who have more resources. When you're in the stock market, you're literally competing with people like Warren Buffett, Bill Ackman, or even huge financial institutions like JP Morgan or BlackRock. But don't worry, there are ways to beat Wall Street investors. And this is an idea from Peter Lynch's book. If you haven't read this book, One Up on Wall Street, please do, as it's one of the best books to start investing. Most investors on Wall Street don't care about the company itself. All they want to do is make money. So they follow thousands of companies at the same time. Good for them, they can afford that strategy. But you, my friend, can't. But here's what you can do. Apart from reading and analyzing financial statements, it's important to follow what is happening in the industry. If you're a doctor who understands medicine, for example, you're more likely to predict whether the product that this pharma company has come up with will work or not, and how likely it is to change the world. While analysts on Wall Street are looking at charts and numbers, you know which company has the product that will sell. If you're into tech and follow every single news and are literally aware of everything that is happening out there, that is your industry. You should focus on tech stocks. Warren Buffett is a great example. While he's considered the best investor in history and one of the richest people on earth, did you know that he has missed a lot of opportunities? He missed Amazon, which was a clear winner. He missed Google, even though 10 years ago, Google was a leader in its industry already. If you list down the top 10 tech stocks, he has missed them all. His first tech investment was in Apple in 2016. But how did he make so much money then? Mostly from banks and insurance companies, which is his industry. The stock market isn't about being right all the time. There is a new company every single day capturing the headlines. But your job isn't to chase the headlines. Rather, find that one opportunity in the industry that you are good at. Of course, it's not just about the product. You should also know how to read and analyze the financial statements. But how can I learn how to analyze the financial statements or find out the true value of the company? I have good news for you. You've been emailing me for years asking me to teach you how to invest. Finally, we have launched our Investing Academy, where we will teach you everything you need to know to start investing. We have been working on this program for the last 8 months at least. Instead of just giving you the knowledge, our primary goal was to help you develop your investing skills. So it's not just lectures, but a program that by the end of it, you will have the investing skills in your arsenal. I have taken the best lessons from the hundreds of books that I have read on investing, finance, and economics. I have included the best practices from all the courses that I have gone through, melded it together with the best lessons from my accounting and finance background, mixed it together with my 8 years experience in the stock market, and that's how this program was born. I made sure that the program only contains the best lessons that are practical and are aimed at turning you into an intelligent investor. The first 100 people who will use the link in the description and use the coupon code INVESTNOW will get a 40% discount. Number 4, don't let your emotions get on the way. The pandemic was the best time to invest in the last 10 years. Without any exaggeration, it was one in a decade opportunity. Such opportunities will come again, but not soon. However, most retail investors, although they made some money, ended up losing most of it when the market crashed by 2022, including those who invested in crypto. And that's because they let their emotions get in the way of investing. The moment you let your emotions take control of you, you're done. You will get greedy and sell too late, or get too scared to invest when the market is down. One of the ways Wall Street investors make money is by playing around with your emotions. They know that you don't have all the data in the world. They know that you haven't analyzed the financial statements. They have enough resources to play around with you. I mean, BlackRock literally has like $9 trillion under management. You have no chance to compete with them if you're going to get emotional. It doesn't matter how much you like the company. Investing isn't about liking or disliking. It's about finding which companies will thrive and which ones will not. One of the rules of investing is every stock will come back to its true value. So if it's hyped, for example, sooner or later it will collapse. If it's undervalued, it will jump back to its true value. The best way to stop your emotions from making bad investment decisions is by learning how to find the true value of the company. So even if the stock falls down, you will know that it will rise back. And if it's hype, you know that it's overvalued. Number 5, if you're not sure, don't invest. Just because you have spent time researching the company, it doesn't mean that you should invest in it. The first rule of investing is that, according to Warren Buffett, don't lose money. And the second rule is, don't forget rule number 1. Remember, your capital is the most important thing when it comes to investing. If you make like 15% annually, you will be considered a great investor because the market average is like 7 to 10% at best. So anything above that is extraordinary. That will put you in the same line as Warren Buffett or Bill Ackman. If Warren Buffett makes 15% on his net worth, that's $18 billion, since his net worth is $119 billion. However, if you make 15% on your barely saved $10,000, that's just $1,500 annually, not even enough to cover your rent. And if you make a bad investment decision and lose half of that, next year, even if you make like 20% return, that's just $1,000. So preserve your capital as much as you can. Investing is always risky. You can never be right all the time. You will make mistakes. That's the nature of the stock market. But you should minimize the mistakes as much as possible, especially if you're going big. Building wealth in the stock market takes time, sometimes decades. But once you build big enough capital, you've won the game of money. Your capital will generate enough income to retire you for the rest of your life. So if you're not sure about a certain stock, it's better to skip it and invest when you're 100% confident that you have stumbled into a great opportunity. If you want to learn more about investing, read books or ask people who have more experience in the stock market to teach you. Investing is a skill, just like any other skill. It's a learnable skill. For those who are interested to enroll in our program, don't forget to use the code INVESTNOW to get a 40% discount. I hope you enjoyed this video, but most importantly, you found it helpful. Thanks for watching and see you in the next one.